I made a mistake in presuming that the self-interest of organizations, specifically banks and others, was such as that they were best capable of protecting their own shareholders and their equity in the firms.
He told me that his agency had dropped the ball, but that I had a public duty to keep investigating because the Manoff Ponzi scheme was such a clear and present danger to the nation's capital markets.
What blame should the Bush administration take for the current economic situation in the United States? And have you been asleep at the switch and ineffective?
No, I would say this. I'm playing the hand that was dealt me.
Bernie Madoff's crimes. The federal government's response to the global financial crisis. Wall Street conflicts of interest. Now, there's a handful of documentaries recounting these events in 2008, and you might think we'd be talking about one of them to explore these topics. But no. No. Today we're going over the 2010 buddy cop comedy featuring Will Ferrell as a reformed pimp turned NYPD accountant, and Mark Wahlberg as the grounded peacock who shoots Derek Jeter during the World Series.
This case is talking to us. I'm a peacock, Captain. You gotta let me fly on this one.
Today, we're talking about the other guys. Hi, I'm Jack, a risk and financial advisory consultant, and today we'll be doing a somewhat detailed financial analysis of the film, though mostly skipping over the parts that don't relate to the film's financial components. Now, while at its surface, this is a goofy action comedy starring two A-list actors solving a crime and catching the bad guys, there is a bit of subtext to this movie, along with its very, very overt messaging that involves contemporary financial events from 2007 to 2009. Although it's unclear exactly when the script was penned, we do know that principal photography for the guys began in September 2009, which for context was only 1 year after the TARP bailout announcement in September 2008.
When's the last time you had a desk pop?
September 08.
And only about 10 months after Bernie Madoff's arrest in December 2008. So it may be fair to say that these events would have been very fresh when the movie was written. This movie's motivations also began to make a bit more sense in that director Adam McKay was also responsible for directing The Big Short in 2015, just 5 years later, which similarly dissects the issues that led to the financial crisis and the bad actors who compounded those problems. I do think it's notable, though, that The Big Short stakes its premise on the asset managers who discover the systemic issues, while The Other Guys is obviously a comedy first and a not-so-subtle exploration of those similar themes second. The Other Guys tackles a few ideas related to the world of finance, namely being conflicts of interest, accounting fraud and earnings management, regulatory incompetence, questionable government bailouts, and Ponzi schemes. We'll explore these ideas as they crop up while we evaluate the film's plot from a financial lens. The film begins with the two renegade cops, Danson and Highsmith, played by Samuel L. Jackson and Dwayne "Rock" Johnson, involved in an explosive car chase and later a jewelry heist. While the jewelry heist initially reads as purely comedic, as the two detectives seem to miscalculate the existence of bushes on the street below them.
Partner, aim for the bushes.
And of basic physics. The scene does later tie into the story in a pretty slick way. The film portrays a double bluff in that the renegade cops are set up as the protagonists, they die at a seemingly irrelevant to the plot crime scene, and then the other guys take over. Although their important investigation, that being the other guys, eventually leads them right back to the real goal of that initial heist. But we'll get to all of that later. Now, a little later in the film, David Ershon, the billionaire hedge fund investor, gives his version of the Gordon Gekko greed is good speech.
Please, do not stop profiting. Live for excess.
Greed, for lack of a better word, is good.
If you thought this movie was always going to be subtle, think again. In fact, Ershon gives his speech about excess at the, let me see if I'm getting this right, the Center for American Capitalism. Huh. I feel like I was just beaten over the head with something.
And it's because of this excess that I have flourished. It's the American way.
Moving on. Afterwards, we meet the film's main villain, Australian mercenary named Roger Wesley. We then see a phone call between Ershon and then his investor, Pamela Boardman, who makes it very clear she's going to make sure her firm, Lendl Global, doesn't report any losses, as she says.
The Lendl quarterlies come out on the 26th. You have until then to give me my money. I'm not reporting any losses, David.
Now, Pamela is almost definitely referring to her company's 10Q, which is a quarterly report of a publicly traded firm designed to provide investors with insights into the firm's financials, specifically their balance sheet, which is just, the assets and liabilities of the firm, their income statement, which is the revenues and expenses, and then finally the statement of cash flows, which is just essentially how money flowed during this quarter in terms of the firm's operations, their investing and financing cash flows. Now, 10Qs, unlike the 10K, which is a firm's annual earnings report, are not required to be audited by an auditor. Though the SEC does require that firms have an independent accounting firm review their financials before filing, which all of this will become irrelevant later. Also, just for reference before we move on, auditors will provide what's called a qualified opinion if there are material discrepancies from what the auditor notes and what the firm intends to report, meaning that all publicly traded firms aim to get an unqualified opinion from their auditor. Which, again, in this case, this is something that doesn't necessarily relate to where we're at, but would be important later. Now, the main storyline in the start of the financial subtext begins when Will Ferrell's character Alan and his partner Mark Wahlberg's character Terry go to investigate a scaffolding permit violation by, again, who we've already met, David Ershon. The duo encounter and arrest Ershon. However, on their way back to the police station, they're ambushed by a team of mercenaries who apparently kidnap Ershon. And again, this is led by the film's main villain, Roger Wesley. Now, before we move on too much, let's analyze this illegal permitting for construction.
Legal permitting for construction, specifically scaffolding.
Or the scaffolding permit violation. I had a few thoughts here. And again, as Alan kind of lays out,
Property owner with 7 buildings under construction hasn't applied for a single scaffolding permit.
I can't say I'm too familiar with OSHA violations, especially in New York State, especially as there was criminal offenses too, though I was surprised to see that Alan and Terry end up arresting Ershon for the scaffolding violation. Ershon seems pleasantly surprised he's being arrested for this, and likely happy it's not for securities violations, so perhaps he's aware this wouldn't be an arrestable offense, and he likely wouldn't have served any actual jail time. This would also fit in the movie's narrative that Alan and Terry are, at times, dangerously incompetent at their jobs. Also, having watched this movie all the way through before, I noted the through line that if Alan and Terry hadn't investigated the scaffolding violation, then it's very likely that Ershon employs earnings management with his fraudulent accounting firm and is able to effectively continue his Ponzi scheme and pay back Lendl Global with the investment from the NYPD pension fund. But, hey, spoiler alert, we'll get to that later. This does also remind me of the infamous example of Chicago gangster Al Capone, who, despite being wanted for far more violent crimes, was only convicted to 11 years in prison on 22 counts of income tax evasion. I think the irony of that case was, of course, that a man alleged to have committed, labor racketeering, illegal alcohol distribution, prostitution, and gambling was only taken down by the IRS for the white-collar crime of not properly paying his taxes.
And if I don't pay up, I'll go to jail for tax evasion. I'm crazy enough to take on Batman, but the IRS, no, thank you.
The scaffolding permit violation could just be considered another plot device to kickstart the story, though similarly to Al Capone, this could have been a subtle nod to the fact of Ershon committing the crimes of, embezzlement, securities fraud, potential or a litany of other crimes that we don't really know about. He's only initially being investigated because of a simple scaffolding violation. Now, let's get back to the plot. After Alan and Terry got their firearms back, but really just Terry because Alan can't be trusted due to his office discharge, the duo are then told that Ershon was not in fact kidnapped.
Sorry, gentlemen. We thought you were abducting Mr. Ershon. It's only protocol.
So the two go to Alan's house to do a little bit of research on their own. Now, in Alan's very professional presentation,
Complete with pictures of Mr. David Ershon, I used Adobe Premiere.
We see a photo of Ershon shaking hands with, assumed at the time, President George W. Bush. It's completely possible that this picture was just intended to show how well-connected Ershon is, though there is an additional interpretation as well. President Bush was personal friends with Enron CEO Ken Lay, even going so far to affectionately refer to him as Kenny Boy. Now, Ken Lay and Enron undoubtedly benefited from his friendship with Bush, as Enron was involved in private meetings with Vice President Dick Cheney regarding energy policy, the main thing that Enron traded in at the time. In fact, Bush flew to his own 2000 inauguration on Enron's corporate jet, which is surprising. Terry and Allen then discussed Lendl Global with its particular jingle, Lendl Global, we're in everything.
You've probably heard their jingle. Lendl Global, we're in everything.
This is almost definitely a nod to the banking and insurance sectors, which during the fall of 2008 were deemed too interconnected in the global economy to be allowed to go under. Essentially, and as the film explicitly says later at the very end, too big to fail. Now, the reference to Ershon being personal friends with current at the time Supreme Court Justice Antonin Scalia,
David Ershon is often found in the company of Judge Scalia.
Yeah.
is likely a reference to the fact that while Scalia's job would imply impartiality and independence, the former justice would frequently take trips from private sponsors and political donors. You may ask yourself, how many trips could he possibly have gone on? I mean, like 5 trips? 10 trips? Well, it's a very reasonable number of 258. Of course. Later in the film, Terry and Allen look at a newspaper and discuss the idea of New York State Lottery needing to potentially invest its earnings. Now, I will say, lotteries will occasionally need to ensure their payout to the winner is secured. Basically, in the cases of annuities or these long period payouts, though I will say oftentimes lotteries will really only invest in the safer assets, like the risk-free rate, which is referred to as the U.S. Treasury bills, or T-bills as they're often called. It would be unlikely for the New York State Lottery to invest in a riskier form of investment, such as a hedge fund. Again, going back to the plot at this point, the duo then head to a random strip mall in New Jersey to check out Dawson and Gretschel Associates, which is the accounting firm doing the books for Ershon's $70 billion investment portfolio. While this firm could be doing a bang-up job managing Ershon's books, it is often a red flag for large institutions to utilize smaller accounting firms, especially as auditors, as it's very likely that the accounting firm won't be able to adequately assess the financial performance of the much larger institution. Allen also correctly points out, as he says,
what accounting firm is closed at 11 a.m. on a Tuesday?
Which rightly questions the validity of Ershon using this firm to manage his books. The film's main villain, Roger Wesley, then pops back up to blow up the firm, which leads to the comedic scene of Terry and Allen not successfully walking away from the explosion. After an amusing anecdote about Allen's past as a college pimp, the two head to Ershon's office to confirm about the explosion. This is when Terry points out to Ershon,
and we know you're targeting a big fish to cover losses,
which, despite Ershon's denial, is exactly what's happening. Then Ershon bribes Allen and Terry with New York Knicks tickets to get him off his back. The same cycle repeats almost immediately after the next day, as they're then bribed into going to the Jersey Boys Broadway show. This is, of course, a massive conflict of interest for the detectives investigating a crime to accept any monetary gifts from their primary suspect. Once Allen and Terry get back from their involuntary trip to Vegas, don't ask, it's then revealed that the jewelry thieves from the beginning only ended up stealing around $74,000 in diamonds, which, for context, would still only amount to around $92,000 in 2025 when factoring inflation for jewelry specifically. This is quite unusual for a heist that elaborate and well-timed, and as they kind of point out that they were using Special Forces zip lines.
Special Forces zip line.
This does also have Allen in the audience rightly question the crime, which we'll get back to later. Allen and Terry are then told by the district attorney to stop investigating Ershon as, he's...
But I've been getting calls from people I don't ever get calls from.
This is again a conflict of interest, as the individuals who the duo are investigating are also making demands that they not investigate them. These examples of conflicts of interest, of course, tie to a larger theme that was present in the financial industry at the time. One noteworthy conflict of interest that actually still exists today is the issuer pays model, which even after the Dodd-Frank Act passed in 2010, allows investment banks to pay rating agencies, namely being Moody's and S&P or Standard & Poor's, to rate their debt securities, which is intended to give investors a strong sense of the risk and return profiles of these securities. Again, going back to the plot. The duo then learned from their coworker Bob, who's the treasurer of the police union, about an upcoming reinvestment of their pension fund.
There's a proxy vote for a big reinvestment of the pension coming up,
which will become a little more important later. Eventually, Terry and Allen head to the SEC to turn over the evidence, where we get a very concise description of what the SEC,
an independent government agency who, along with the FBI and the Federal Reserve, regulate the stock market and corporate fraud.
And the Federal Reserve.
No, basically it's a help-for-profit bank that sets interest rates and loans money to other banks.
Are. We also learn that the SEC employee that Terry and Allen have to turn their evidence over to is Don Beeman, who is introduced as Urshan's lawyer. Another clear conflict of interest that the film very blatantly spells out, especially with the whole
I am playing squash with him tonight at the club, and we're having dinner.
and then Terry responding.
You play squash with Urshan, right? How would you know if he's clean or not?
I can't say this is specific to any one SEC employee and hedge fund manager, though this situation does kind of maybe broadly speak to the practical lack of independence which when SEC employees and those in high finance tend to run in the same circles. Also, Alan's line, I truly hope you take this seriously. From what I've heard, you guys are the best at these types of investigations.
Outside of Enron and AIG and Bernie Madoff, WorldCom, Bear Stearns,
Okay.
Lehman Brothers.
Whoa, let's slow down there, Alan. Let's do a quick breakdown of all the incidents that were just mentioned. It is true that the SEC didn't successfully detect Enron's massive accounting fraud.
That's our vision. We're trying to change the world.
Nor WorldCom's, mostly because it relied too much on both companies' external auditors, which in both cases was Arthur Andersen, and each company's own disclosures. The SEC also lacked sufficient oversight of the complex financial instruments, and overall it was under-resourced to effectively monitor the corporate practices of that scale. These two incidents were responsible for all three firms going under, and mostly responsible for the passing of the Sarbanes-Oxley Act in 2002. So if you ever hear a company referring to SOX compliance, that's mostly thanks to Enron, WorldCom, and Arthur Andersen. Now, the SEC also failed to prevent AIG's 2008 collapse because it inadequately regulated the firm's risky derivative activities. And just for reference, a derivative is just an asset whose value is derived from an underlying asset. SEC also relied on the insufficient self-reporting and oversight of its financial products division, headed by a man named Joe Casano, and also lacked the authority and coordination to manage systemic risks building outside traditional securities regulation. Essentially, AIG FP, financial products, was in many cases the sucker when it came to transactions with the five major investment banks, and specifically Goldman Sachs, and AIG's writing or selling of credit default swaps. The SEC also failed to prevent Bear Stearns and Lehman Brothers' collapse by overlooking the firm's respective excessive leverage and risky mortgage-backed securities, or MBS, exposure, even with the clear warning signs in its balance sheet, or in both respective balance sheets, and the broader housing market slump. One issue, especially notable for Lehman, was their direct investment in the housing market, or buying up residential mortgages, specifically, which during the credit crunch of 2008 was especially problematic, as that meant a portion of their assets couldn't be fairly valued and sold in a timely manner, meaning that much of the firm's assets were illiquid. The most baffling example of missing the mark came in the form of the SEC failing to stop Madoff's Ponzi scheme, even with multiple credible warnings. This happened because the SEC conducted superficial investigations, clearly lacked coordination between their offices, and failed to grasp or verify the basic mechanics of his purported investment strategy. For example, Madoff used a purported split strike conversion option strategy, which theoretically could achieve a 10 to 11% return. However, this is heavily dependent on market volatility, or the market not being volatile, and the timing of the trades. When the overall market had negative returns in 2000 through 2002, Madoff's fund should have returned a negative 12% return in 2001 and a negative 9% return in 2002, and yet his alleged returns during this period were consistently positive. Now, getting back to the plot again. While on leave, Alan does a personal investigation of the jewelry heist from the beginning of the film. He notices the jewelry store is next to Overton Accounting LLC, which was also damaged during the jewelry heist that we talked about at the beginning. Overton is notable as we learn its main client is Lendl Global. Alan then speaks to Terry and essentially reveals a huge plot point in the film, as he says, I found out whose losses Urshan is to cover, Lendl Global.
What? Lendl staged the Castion robbery as a distraction so they could break into their own accounting firm next door.
They then altered all the records to cover the losses that Urshan had cost them through all his bad investments. Now, Overton was definitely broken into because, as we previously discussed, a firm doesn't need its financial statements audited for a 10Q, but they do need an independent accounting firm to review their financial statements prior to filing. This is, again, the reason for the heist in the first place, as it now all comes full circle. In the large investor meeting the following day, Ershon tells Roger he owes money to Chechen and Nigerian investors, and then he follows that up saying,
And I can assure you that every dime of your money will be invested with the utmost diligence.
well, he's talking to Bob, the investor of the NYPD pension fund. Again, while this phrasing that Ershon's using is not inherently fraudulent and would normally be an all right statement from a fiduciary, we of course already know that the invested money from the NYPD would likely be used to pay back London Global and presumably the Chechen and Nigerian investors if there was anything left over. And with this revelation come to light, we finally get to the main crime that Bernie Madoff was known for, a Ponzi scheme. Ponzi schemes are essentially just frauds that involved initial investors in a fund being paid out dividends or earnings with the money invested by later investors. For example, if Ershon gets two investors initially, and one of the investors wants to cash out his excellent but fake investment returns, then Ershon may use the money from that second investor or later investors to pay back the investor who's cashing out. This scheme works because investors seeing the excellent returns will spread word of the fund's great performance and choose to either reinvest their money or be duped into convincing other investors to invest their money. When Ershon says,
I mean, we've averaged like 18% over the last 10 years.
It is pretty notable. From the time period of 2000 to 2010, the S&P 500 had an almost negative 1% return, which does call into question the validity of a claim from David Ershon, the hedge fund manager, that after taxes and fees, he'd be so successful in beating the market by almost 19% per year. Now, when Ershon reveals to the duo that, as he says, Beeman knew I had falsified my financials, so they sent down Wesley to try to keep him quiet, at this point ironically goes against what the film had been setting up earlier, as the point was kind of clearly made that Beeman had a clear conflict of interest in investigating David Ershon and should have left the case to someone else. If Beeman was silenced due to his knowledge, this would imply he'd actually take the investigation seriously and perhaps do the right thing still, which would have been done even with a conflict of interest. And you could just say this was the film's villains obviously being extra cautious. But again, I think it's important to note that in reality, we know it's typically not the case, that conflicts of interest do affect our judgment, and they do prevent the necessary independence that should exist in the financial world.
Bet Beeman started asking questions, that's why they killed him.
Now, as the film lays out, within 24 hours of learning about Ershon's scheme and Lendel's massive losses, the government issued TARP funds and bailed out Lendl. They were too big to fail. To provide some context, the TARP funds, or Toxic Asset Relief Program funds, which were penned by Treasury Secretary Hank Paulson, who's also happened to be the former Goldman Sachs CEO until 2006, the TARP funds were introduced shortly after the Chapter 11 bankruptcy of Lehman Brothers and the steep market decline that followed. It was viewed at the time that Morgan Stanley and then afterwards Goldman Sachs would be the next or most likely firms to fall, as their shares were decreasing in price every day, and creditors expressed concern about the firm's status as a going concern or its ability to continue operating. The TARP funds were initially just devised as a way for the government to buy up some of the toxic assets, namely the residential real estate and related RMBSs and CDOs, or collateralized debt obligations. However, the Treasury Secretary noted that this wouldn't be enough, and after getting both presidential and congressional support for this, the TARP funds were also used to invest in the investment banks themselves. The investment was in kind of an implicit backing by the federal government, which was also able to successfully ward off any continued short selling by any opportunistic hedge funds who smelled blood in the water. Now, moving forward a little bit, the end credits provide excellent visual aids to help the audience understand some of the concepts covered in the film, and it's part of the reason I actually wanted to make this video. Despite the film's clear explanations of some of the heavier financial concepts, the visuals at the end do a good job of breaking everything down even more, especially for the layman or someone who's not really that interested in finance. I won't go through all the visuals, as most are pretty self-explanatory, though the one I want to touch on is regarding the 401k. The credits show that the average American 401k account in 2005 was $102,000. However, by 2007, this amount had dropped to $69,000, and by 2009, it dropped to $64,000, representing a 47% loss in the 4 years. Unfortunately, due to the job losses and financial difficulties, many families did have to pull from their retirement accounts to pay for basic expenses during this time period. I do want to note, however, though, for those who are not on the cusp of retiring and won't have to take out their retirement contributions anytime soon, panic selling your investments is often a recipe for disaster. For those who kept their money invested, the market rewarded them over the last 15 years. From the time period of 2010, when the movie came out, to 2025, the United States saw one of the longest bull runs in market history. In fact, today in 2025, an investor who had just $64,200 invested in their 401k would have seen an almost 14% annualized return, which, if you take out the management fees on any mutual funds that are owned for a moment, that $64,000 in the S&P 500 would be worth around $422,000 today. And that's without contributing any additional money and just letting it sit and compound interest do its thing. If you can get to a place financially where you're able to safely participate in the market, you can slowly accumulate wealth and hopefully plan for a comfortable retirement. Now, my last piece of advice here would be to never invest money with David Ershon. And also, when it seems too good to be true, probably is. Thanks for watching.
You know what, Terry? Let's just settle this. Peacocks don't fly.